Thank you very much, Shona. Thank you for the introduction. Yeah, my name's James Dempster. I'm a director at FRP Advisory based in our Glasgow office. As Shona mentioned, I've been in the kind of insolvency instruction market now for almost 20 years, a large portion of that at KPMG, and then moved to Leonard Curtis and subsequently FRP about 2.5 years ago now. So the purpose of the session today is really just to cover kind of best practice in relation to compliance with SIP2. It's a SIP that I guess many of us on this session will be very familiar with. It covers investigations by office holders in administrations and insolvent liquidations and submission of conduct reports by office holders. So it's effectively a very key part of the role that IPs undertake in insolvency cases, and one that we're very familiar with. Just as a kind of refresher overview, basically the office holder's got an overriding duty to carry out appropriate investigations and proportionate investigations in each kind of insolvency cases. There's two key purposes for that. The first is to investigate whether there are any assets available to the insolvent estate, and secondly, to report on the conduct of those that were in control of the insolvent entity in the lead up to the appointment. So the kind of key principles underpinning the SIP is that conduct investigations should be appropriate and proportionate to the circumstances of the case. The IP should be reporting clearly on the steps taken in relation to investigations and the outcomes, and to submit conduct reports in a timely manner. And I guess the overriding requirement that which I'll cover a few times throughout this session is the requirement to fully document both the initial assessment, the investigations that are undertaken, the conclusions reached, and even where that conclusion is that no further investigation is going to be required, and also any decision to restrict contents of report to creditors. So documenting the process is very key to the compliance with the SIP. So why is this an issue? Well, it's become a kind of key area of focus with RPBs. Stephen's recent webinar, which he hosted to summarise the results of the ICAS visits during 2001-2022, SIP2 compliance was an issue in around 40% of those visits, which is a pretty high number for something that we do in most of our cases. Four kind of principal issues arising from those visits was a lack of investigations, which I assume was in a very small amount of cases, lack of evidence supporting any the kind of level of investigations undertaken, failures to secure books and records, and inappropriate attempts made to secure those records. And I mean, I guess the kind of key overriding kind of issue is that that there was a lack of evidence in the case files to support the kind of investigations that were undertaken. Not that they weren't undertaken, but a lack of evidence on file to support the level of investigations undertaken, the conclusions reached, and that kind of ties back to kind of overriding one of the overriding principles, SIP1 Part 7, where we should be evidence compliance with the SIPs and documenting strategies and decision-making processes appropriately. So just to kind of cover, I guess, in a bit more detail, some of the common themes that came up. Checklists. I mean, I guess it's a common tool that we use. I assume most firms will have, like we do, a checklist to run through the kind of SIP2 director's conduct investigation. I think that the issue is that whilst the checklist is very helpful, there was a kind of lack of evidence on the files to support the kind of conclusions that were reached in the checklist. I guess, for instance, if there's a question, was there any evidence of unfair preferences, and answer yes or no, where it's answered no, what evidence is there on file to show that how you reached that conclusion, or what how do you link back the conclusions reached in the checklist, the decisions made in the checklist to the file. I guess there are issues, yes, some of the checklists not signed by the office holders to show that they've kind of agreed and are happy with what's been undertaken. Investigations didn't cover review of COVID support schemes. That's obviously a kind of key focus and has been for the past kind of year, 18 months or so, as there's a kind of new section added to the Directors' Conduct Reporting portal to specifically cover those issues. I'll come to that in a bit more detail later. Bank statement reviews, obviously very common and key to complying with SIP2, but bank statement reviews were not covering the correct period, not looking back far enough. lack of progression of matters identified, where initial investigations were undertaken, potential issues were identified that required follow up, and those issues had not been followed up. And I guess, yeah, as I'd mentioned in the previous page, lack of evidence taken to secure books and records, evidence of a review of those records, and I guess that kind of ties back to the overriding point of how can you say that proper records were kept if you aren't able to secure them, and there may be reasons for that. And but also once you have secured them, there's no evidence on file to suggest whether they've been reviewed and to what extent. I guess final point there, just a general lack of kind of meeting notes, telephone notes with kind of key officers of the company, directors, key staff, and to kind of support the kind of conclusions reached and any follow up points. So in terms of, I guess, SIP2, there's a kind of a wide range of of information sources that are available to ourselves as IPs to help us comply with SIP2. I've kind of listed some of them there. I'll just run through them quickly, but I've got more on this in the next slide. Books and records, physical records. More recently, it's more likely to be electronic records. Very few companies these days have large amounts of paper records, if any. Information from creditors, a very kind of crucial area for us in progressing investigations. Financial information, accounts, statutory accounts, management accounts, projections, VAT returns, that kind of thing. Bank statements, very crucial to review. Statutory records, such as board minutes, that kind of thing. And then information from the officers of the company, completion of the statement of affairs, questionnaires, and further inquiries that are made. So just kind of jumping into these in a wee bit more detail. Books and records, I guess we've got a duty in our cases to gather, all relevant physical and electronic records following an appointment and document the steps that we've taken to gather those records and any difficulties we face, which are very often in our cases, and I'll come on to some of those difficulties shortly. We have a kind of standard process where we have a kind of internal IT advisory team that we use who secure electronic records for us and hold them in a format that we can then access remotely and review when we need to. So it's quite helpful to have a kind of standard process in place for securing those records. Always being mindful, I guess, of our kind of GDPR requirements. The IP does become the data controller, so it's ensuring that we only keep records that are required as part of our kind of statutory duty, as part of our investigations, and ensuring that we don't take all records that were not needed, and to the extent we do, that we're holding them in an appropriate way and disposing of them in an appropriate way. Information from creditors, the SIP is explicit in that we should be inviting creditors to provide information or concerns they have on the conduct of the directors or potential recoveries, ideally in the first communication that's sent to them. We use a standard creditors questionnaires, as I assume many others do, I guess, as a tool to kind of prompt creditors to provide us with some additional information. It's key that that anything that arises from that correspondence is documented, is investigated further, and is then taken into account within the investigation process and the director's conduct report. Financial information, as I mentioned, it's a case of reviewing statutory records, statutory accounts, management accounts, projections, the underlying information, kind of Sage account zero. Are there any directors' loan accounts? How did they come about? Are they due and payable? Has there been significant movements on them? Are there any anomalies in those accounts? Assets that aren't included in the statement of affairs, significant movement in the assets in the period leading up to appointment. So there's the various items that need to be covered when reviewing the financial information. How is funding that's been obtained been used? And that kind of ties back into the kind of BBILS and CBILS coronavirus support schemes. And I guess investigations generally should cover, whether that financial information is up to date and accurate, which in many cases we deal with, it likely won't be. Bank statements, as I mentioned, key aspect of a review process, that they should cover minimum 2 years. But again, that should be extended as required if there's things that, potential gratuitous relations to connected parties, but also to investigate COVID support schemes. We're now kind of 3.5 years since COVID started, if you can believe it. And as a result of that, we need to go further back to see what support schemes were obtained, and how were they used. Through the bank statement review would typically cover transfer of assets, preferences, how's funding been used, related party transactions, personal expenditure, round figure payments, that kind of thing. And the full review should be documented on file, not just a review by exception. And there needs to be evidence on file to show that we have conducted a full review of the bank statements. We have a kind of software package that we use that downloads the statements into Excel and almost kind of sorts them out. And having that on file is actually quite useful, because that's the kind of first stage of the review process. But having that on file to show that full review process has been undertaken, and then a kind of summary conclusion memorandum to sit beside that as to what's been identified and what kind of follow-up actions there are. Review of statutory records is key. Board minutes, what is there a record of decisions that have been made in the lead up to insolvency? What steps have been taken to prevent, avoid it? Any non-compliance with Companies House, late accounts, late annual returns, any inaccuracies in that information that's been submitted. And then final point is that the information we receive from directors, questionnaires, statement of affairs, have they been submitted? Have they been adequately completed? We need to record any non-compliance, and any steps we've taken to chase that. Obviously, the IP has a number of tools to try and compel compliance, so we need to evidence what steps we've taken to do that, and also review and document any kind of anomalies, any issues that raise concern from that information. As I mentioned, with insolvency cases, that we often encounter significant barriers to obtaining the information we need to progress investigations. Particularly in cases where it's an enforcement type scenario, or creditor-led type of scenarios, it might be a bit more difficult to get a bit of cooperation from the directors, key employees, and that often results in issues with information being obtained. We also often have problem with access to records themselves. Landlords are owed rent, IT providers cut off supply. Obviously, we've got additional powers now to try and stop that kind of thing happening. But in cases where there are limited funds and things, that's obviously causes problems and causes issues with kind of obtaining information we need. Lack of creditor engagement, we have that in a range of cases where we don't creditors don't engage with the IP. We had a case recently where we were looking at pursuing an action against the directors, and asked some creditors to assist with that. And they're unwilling to do so, because effectively the outcome, had we had a significant recovery from that action, would have been a prescribed part dividend only to the unsecured creditors. So because the return for them was going to be so small, they're effectively unwilling to spend the time to assist. Other issues we have: poor record keeping. A lot of the cases we deal with, the company will have incomplete or out of date records. How often do you be appointed to a liquidation case administration where there's no management accounts, or they're significantly out of date? So those issues do cause significant problems from an investigation perspective. And obviously another one, delays in banks providing statements. I guess we've probably all experienced that. I think it's got a bit better recently, but particularly where we're having to submit conduct reports within 3 months of appointment, it's often quite challenging to get the bank statements from the bank, and have the time to review them before that conduct report goes in. So I guess these kind of issues, these impact an investigation process, but they need to be fully documented on the file. Any kind of barriers that have arisen, and what impact that's had on the investigation, and what steps are taken to try and get around these barriers. And I think they also, just the last point I put there, is also need to evidence on file that information requests are followed up regularly. Issuing a one chaser email, phone call, letter is not sufficient. We need to make sure we're on top of that and getting the information that we need to comply with SIP2. Just in terms of government funding, as I mentioned earlier, it is a significant focus area in recent months. I guess that many of us on this session will have kind of war stories of misuse of COVID support schemes that we've encountered. We've had various Secretary of State appointments, public interest winding up, where companies have, obtained multiple C-bills using false information on applications, or not trading, never had traded, and have been able to obtain this kind of funding. So yeah, there's a key focus, as part of our investigations, to comply with SIP2, and as part of directors' conduct, to review how the company has used any kind of COVID support it's obtained. So we should be, from that perspective, we should be contacting the banks in question to get copies of the loan documents, loan applications, areas to look at. Did the company meet the criteria? Where the funds they obtained used for the benefit of the business and not used elsewhere? Was information supplied accurate? Was the business viable? Were it not for the pandemic, was the business trading at the time of application? Intention to carry on or repay the business? Was it disclosed in the information that we requested from the directors? Uh, as I say, there's a specific new section on the directors' conduct portal to cover off these issues. I mean, as I say, that we've come across this in various cases where, particularly, I guess, with bounce backs and small liquidations where the funds have come in, where the company potentially was not eligible, and those funds have been used for non-business purposes. It's unfortunately been pretty common. Uh, Job retention scheme is also a kind of area of focus. Whether the company was eligible for the scheme, how they used the funds, whether any fictitious employees. I guess from that kind of perspective, that area is a bit more difficult to investigate. But certainly we had a case recently where the business and employees had transferred to a related business, 18 months prior to insolvency, and the insolvent entity had continued to claim uh, furlough payments despite no longer having any employees. So, we were able to identify that, and it did result in a kind of significant return to the insolvent estate. So in terms of just, I guess, reminder, SIP2, what in terms of investigation issues that arise from the investigations, what steps can we take to follow them up, to try and get further asset realizations to the states? There's various claims that can be raised against the directors: misfeasance, fraudulent trading. Obviously, it's a bit more serious one very hard to prove. Wrongful trading. Other issues in the investigation process that have led to disqualification, or grounds for disqualification, and various other kind of sections 206, 211 that have various other potential claims that can be arise against directors. And I guess in terms of part of review process, part of our investigation work, are there challengeable transactions that can be identified that we can pursue? Gratuitous alienations, whether assets have been transferred for no value or undervalue. That kind of feeds back to the bank statement review. It's need to look going back 2 years to look at that, and potentially extend that for up to 5 years if there's a evidence or a risk of a transfer of an asset to an associated party. Unfair preferences, when payments are made to one creditor in preference to another, and there's various remedies available to try and kind of uh, raise action where we identify those issues. So in terms of, I guess, just the kind of SIP2 review process, the kind of, I guess, just kind of summarising it there, the initial point of that is to and gather the information that I outlined earlier, review it, highlight and document any issues we've had in gathering it, make additional inquiries, initial inquiries at that stage if there's any kind of bits missing in the information, and review and consider all that information together as part of the investigation process. That leads to an initial assessment. Are there matters there that may lead to recoveries to the case, and that may lead to conduct issues? What further investigations may we need to take? And we fully document the findings of the initial assessment, and the next steps that need to be taken. Consider are further investigations required? Consider you need to consider the circumstances of the specific case. Is it in the public interest? are there potential recoveries available? Is there funding available to try and pursue those recoveries by means of creditor funding or litigation funding, case funds? So need to consider that, and throughout the whole process, yeah, as I'd mentioned earlier, document each stage of the process, your findings, next steps, and any limitations there's been in the investigation process and conclusions reached. As I said earlier, again, particularly where that conclusion is that no investigation is required, there needs to be evidence to show why that is the case. And finally, on reporting requirements under the SIP, the IP's got a duty to report to creditors uh, of any details of action that's been undertaken and whether third-party funding has been provided. Any that reporting is obviously subject to confidentiality, subject to privilege if there's ongoing actions, but that should be reported to creditors as a minimum in the first progress report and any subsequent progress report where uh, issues have been identified and progressed. We've got a duty to submit our conduct report. That's a statutory requirement that must be completed in every case, notwithstanding any shortage of funds. That we need to do that. Shouldn't be disclosed to third parties. We often have requests to do that, and those should be referred to the Insolvency Service. And obviously, that as part of that conduct report, we disclose whether proceedings have commenced or are likely to be. And we need to consider obviously any other reporting and during the course of the investigations we might uncover fairly kind of serious matters that they need to be and potential offences that need to be referred to the relevant authorities, and those may give rise to further requirements uh, to maintain records for a longer period of time and make sure we've got a record of what we're holding and where it is. So I hope that was useful for everyone. Just a quick run through. I appreciate it's a subject we all know fairly well, but it's useful, I guess, just because it's a kind of key focus to RPB, just a bit of a refresher to make sure that within our investigation processes we're carrying out properly and documenting everything we do throughout the process.